Notes from the trading desk. Millions apply themselves to outsmarting the markets. In fact, equity ownership has never been more democratized. Except for a few brief hiccups, the market has been on a tear since 2009, so perhaps half of the new participants or more have never experienced a bear market, and thus dips are nothing but opportunities. Obviously, recessions have been
outlawed regardless of the underlying data,
which is ever more manipulated. Retail investors have been conditioned to believe each and every market level attained is the product of intensive and critical scrutiny. In other words, market valuations reflect all publicly known information and are absolutely rational. But what if they weren't? What if the market was sustained on hopium, classically conditioned into a public left with few investment alternatives now that real estate is hyperinflated away? The challenge is that things have fundamentally changed vis-a-vis markets and reality, and everyone's accepted it. Once the market reflected the overall health of the economy as prosperity trickled down, sort of. That's no longer the case, and we are living the most grotesque Gilded Age in American history, with labor receiving the smallest ever share of the pie. Fed interventions have destroyed the middle class, and without it, we're on borrowed time. That borrowed time has been accomplished through the aristocracy and the top 10% spending, which now accounts for over 50% of consumption. I lay this before you to make the case that the wild and irrational gyrations of markets are the modern version of Rome's circuses, with the lure of the accompanying bread if you can outguess them. But you can't. They're rigged, and you are the mark. The markets, and the S&P in particular, have assumed mythical proportions, like a standard for the strength of the American economy. And I'm saying plainly,
it is an illusion at best, and organized propaganda at the worst.
Supporting the markets with political parlor games such as Monday morning surprises and consequential actions magically happening between market weeks, like skipping spaces in a board game, only eventually the rubes wake up. I hope. Markets must yield a long-term reward, or no one would play in size. No one would believe in them. They'd be reduced to the bet-on-anything poly markets, which allow gaming for weather, politics, even extraterrestrial contact. As the main focus of national attention now, they cannot be predictable because the really big gains are made by a few through the contributions of the many. It means that millions must willingly, whether euphoric or traumatized, buy or sell on cue. That means you. The vast majority of market participants care little for the fundamental metrics that ostensibly support market valuations in the end, deferring instead to the relatively easy-to-interpret charts to make their decisions. The assumption is that those other fools are stepping right into my trap by selling at the lows and buying at the highs. My point to you is that markets are grotesquely overvalued, and that overvaluation has taken place with great premeditation because the average citizen is so desperate for any wealth-generating medium to improve their existence. You see, while inflation has accelerated the top's wealth, it has depleted everyone else's. Stock and real estate bubbles exist artificially. They are not sustainable. They are created each time the Federal Reserve has come to the rescue with monetary and fiscal salvation. To the point of now, right now, the end game is a complete governance over the system resulting in hyperinflation or a deflationary collapse. Congratulations. We got here because the Fed has had no choice but to further enrich the rich, as duct tape and coat hanger fixes to keep the wheels turning. The mode went supersonic for COVID and will go into light speed if used again. At this intersection today, March
28, 2026,
the choice is no longer a nudge to keep things from unraveling. That day is 10 years past. No. With zero reserve banking, a crippling national debt,
a declining and aging population, depleted and indebted middle class, grotesquely inflated investment assets, and an impossible social net.
Choice is either a hyperinflationary collapse resulting in a complete reset, including a new currency like Weimar Germany, or a deflationary collapse like the Great Depression. The Iran War is merely the trigger and not the cause of what will be a market decline in excess of 50% and real estate declines in excess of 30% over the next 6 years. Nothing but a deflation can fix the imbalances, which means any inflation will be temporary, howsoever imminent it may now look, unless we're pushed to Weimar Germany levels. The clever financialization more deeply indebting the lower 90% through corporate profits enjoyed by mostly the top 10% has succeeded in legally forcing capitalism into another New Deal, as time will show. Or else, one which democratizes market gains now enjoyed by the few through individual universal defined contribution plans.
You heard it here first.
You can enjoy the ride down over the next several years, certain that the next presidential proclamation or Fed fix will get things in order, or you can find an investment manager who knows how to trade bear markets. That's a hint. Happy Easter.